My trading strategy is really profitable. I have an excellent risk reward and a good win rate, but I just don't get enough trades. If I were to draw this out, it would look something like this, where you can see risk reward is good, win rate is fine, but frequency is on the lower side. Obviously, I can't impact the win rate without having a direct influence on the risk reward. So I feel that I can focus on increasing my trade frequency to kind of balance out my strategy a little bit. This type of trading strategy isn't ideal for trading prop firms because it means that I'm depending on few infrequent wins to receive payouts, whereas somebody that's maybe making 1 to 2% a month rather than me who makes like 10% a quarter, their equity curve looks a lot smoother, you know, maybe something like this. So they have a lot more payouts, which is obviously much better for prop firms. So my goal is to kind of smooth out my equity curve by introducing a new entry with a lower risk reward, a higher win rate, and a higher trade frequency. And for me, I'm thinking that that is going to be sweeps. So by overlaying the sweep entry with my trending model, I'm hoping that I can overall smooth out the equity curve, which will mean more prop firm payouts and more consistent payouts as well. When I've backtested sweeps in the past, the trade frequency is actually too high. I think there's hundreds of trades a year that set up, hundreds and hundreds of sweeps. So my goal at the moment is to find some filters that reduce the frequency of sweeps that I take while increasing their win rate. And we're going to be backtesting some sweeps today. So I've brought up AU 2023 and we'll just do a couple months of backtesting and I'll walk you guys through my thoughts. So if you're unfamiliar with the sweep model that I've been trading, this is kind of a basic trade plan that I've written down here. We're basically just looking for a break above an old high, and that old high has to have a very strong push down that shows me sellers are in the market. So we're breaking above a level where I know there were previously sellers. And I want to see an immediate rejection once we break into this liquidity area. In terms of high probability price action filters, the one that I've been focusing on most recently is if there's kind of equal highs and we're sweeping these equal highs. I found that that's an excellent filter and the win rate's great. Unfortunately, I backtested 2024 and I could only find like 10 trades like this in the whole year, which is still quite low frequency. So I definitely need to think about some more filters that I can introduce. Another one I was thinking of was kind of directional sweeps. I've looked at this before. I feel like this is a little bit too high frequency, so I might need to add in another layer. Another filter is coming from a channel. So something like this I found works very well. You get only 2 or 3 of those a year, but they're very, very high probability. Another type of sweep that I've been looking at, which I really like, and this is something I've looked at previously, is when we reject into the liquidity area. If we reject with quite a deep push, and then I get a proportionally deep retracement candle, we kind of get this V formation, and we know that after a V we often range and then get a continuation of the second leg. Now this is also basically a head and shoulders formation in this case, because we're coming from a range and we're sweeping that range. So either taking a trade here with this kind of deep V rejection, or taking a sweep of this range here. So there's a few different kind of sweeps that I want to explore. In this video, I'm just going to be probably focusing on the equal highs, equal lows. But yeah, let's just go into it. Let's see what we can find. So I've gone into January 2023, which I know is a year which has a lot of sweeps. I've done 2024 already. I'm kind of working my way backwards. So we've got this big push down here already. You could say, is this a sweep, Griff? I would say no, because there's not enough momentum down here and we're kind of ascending, honestly. This shows a lot of selling pressure. So if we continue ranging, okay, never mind. We just smashed down. I think some people could consider this a sweep as well. For me, this low is kind of irrelevant because we've made so many other lows on the way up. This is more ascending. I'm mainly looking for sweeps of sideways price action. So yeah, I'm not looking for this as a sweep. So this is actually looking pretty good right now because price has just started going quite sideways. So I'd be really interested if we got a double bottom like this and then a sweep of this low. I'd be really interested in that. Another reason that makes this way more high probability is actually the impulse over here, not just because we kind of have the confluence of a trending market, but also because this is something that I would consider to be a thin auction area. Now, that's not something I've really mentioned before. It's something that I'm still exploring, obviously, while I backtest sweeps. It might be irrelevant later on, and you'll never hear me mention it again, but it's quite an interesting concept, so I'll mention it to you now. So it's a little bit like a fair value gap. The logic is that we've moved through this area quite quickly. We haven't spent a lot of time in this area of the market, which means that there's a lot of orders here that are unfilled. Now, this is a similar concept to liquidity, but the more I look into liquidity, the more I realize that is the completely wrong term to use. If I turn on this indicator here called session volume profiles, this basically shows how long we spent in each area of the market, and it's a pretty good indicator of liquidity. So obviously, if we spend a lot of time in a range like this, this is where all the liquidity is, and this is where the least liquidity is, because these are untraded areas. Stop losses, retail stop losses, I know people say that's what rests above highs and lows, but those are so insignificant. It's like a fraction of what makes up actual volume. So my idea is trading into these areas where we've not spent a lot of time. There's a lot of unfulfilled orders in here. And the idea is that this is going to be a low resistance area. So if we break into this area, which is also above highs and lows, but also coincides with an area which we've seen low resistance before, the idea is that we can move through this area very easily. So if we get a push into it and a rejection, that's a very good sign that we're just going to reverse. If we move through it and don't get a rejection, we're probably going to move down quickly through this area. So this is basically just a zone where you need to be conscious that price is going to move relatively quickly. So let's see, if we break below this low, that would be amazing. And we didn't, unfortunately. We broke this high instead. But I hope that was interesting. Session volume profiles, it's worth looking into. There's some good videos online about it. It's not something I really want to introduce too much because I'm primarily a price action trader, you know. Okay, here's a trade. Here's a potential trade. So obviously we've been ranging. We broke the high, retraced with a lot of momentum. So I know that there's a lot of sellers here, which means that they may have potentially unfilled orders above this high. We've swept that high now with this shift candle. I think, if you don't mind, I'm just going to invert this. Yeah, this does look kind of overall like a channel though, to be honest. When there's a trade like this that I'm a little bit uncertain of, what I'll do is I'll put it in my backtesting data anyway, so that when I revisit it later, when I'm refining it all down, I at least have the data point, you know what I mean? So I'm going to put this on here now. What I've been doing, instead of going with 1 to 3 with a 10 pip stop loss, because obviously this is tiny, is I want to start introducing an ATR stop loss. So the ATR here, if you look down in the bottom left, or I might be in the way actually, down in the bottom left here, the ATR on this candle is 19. So I'm testing two different types of ATR. I'm testing a 1x ATR and a 1.5x ATR with a 1 to 3 or a 1 to 2. So in this case, a 1x ATR would be around there. So let's see what happens. Okay, as expected, we got a very quick reaction in this area. That's great. And we hit the profit target and we rejected again. Okay, cool. So that's our first trade and it's a 1 to 3. That's great. What I'll do just for the sake of this video is I won't log all of these in my backtesting journal because that's kind of boring to watch. I'll do that off screen. So I'll just leave this on here for now and we'll continue. Let's see. So we've actually made another pretty good high here, but this is the danger of this entry because we could just keep making these higher highs with these shifts. And then these sweeps can get kind of dangerous because you could end up just losing all the way up. So you do have to be cautious. Ideally, we range. Okay. So this is the V type liquidity sweep I mentioned. So normally I'm looking for an immediate reaction, like I said. And in this case, we didn't get an immediate reaction because we broke above the high, and then this is not an entry candle, I believe. Yeah, so this candle actually closed higher. So in my case, I found that if we break into the above the high, I don't want to call it a liquidity area anymore. If we break above the high and then we get an immediate rejection candle, that is way more high probability than if we continue and then get a rejection candle. Unless we break in really deep and then we have a really deep retracement, because this here could be the beginnings of a V, where we get a range and then a push down. So again, this isn't a trade I think I'll end up keeping, but I will put it in my data just so that we can learn about it. So this is 189 ATR, and I'm gonna put this at 1 to 3 again. So let me get this perfect. 1 to 3. Let's see what happens. Okay. Looking good. Another thing which I'm testing, which I haven't mentioned, is that when we go to 2% profit, which we have, I will be moving my stop loss to break even. So right now, my stop loss is not here. My stop loss is at break even. So we could get tagged out for break even, or we could hit the profit target. We hit the profit target, so that's really nice. The reasoning for setting my stop loss to break even after 2R is basically just trying to have good risk management, because obviously in this position, I don't want to have full risk on the table when we're running in so much profit. I want to trade defensively, and I want to protect my capital. See, this here is nearly a good sweep. If this high had not broken this high, I would have considered this equal highs, and this would have been a beautiful sweep. So just to illustrate, there's a big difference between this and then a sweep, and this and then a sweep, because this is way more ascending, if you can see that. So ideally we don't break this high and then we break it later. There's a big difference between those two type of entries. Honestly, I think I'd look for a sweep on either side of this range. So you could say that this is the high and this is maybe, no, it's not really an equal high, but we do have equal lows, I'd say. I think that's quite good. So let's see if we get a sweep on either side. Okay, we broke the low, but we continued. In this case, this is something I still need to test. I have considered like the difference between a wick break and a candle close break, like we've got in this case. So I'm going to put this in my backtesting data as well, possibly after I've fully analyzed it. Yeah, you could have a rule, instead of having to have a break in and then an immediate rejection, what you could consider is you'll only tolerate one bearish close into the liquidity area. So in this case, we have only got one bearish close. But yeah, I'll put this in my data. I hope I kind of make sense of that. Yeah, this looks pretty good. Now, the issue is, these are kind of internal highs and lows, which are not as high probability. This would be the better area to break into, with this kind of being our equal low. I think some people might call this an inducement, where you've got these like mini lows, and people are going to be taking buys here just to be tagged out as we then go to the actual low. So this is something you'll notice quite often. Do I want to take this? I said I'd put it in my data. We're kind of trending, and this is the most recent low, isn't it? When we're trending like this, I know you could target any of these lows. I am going to always target the most recent relevant one, because you can always find another like liquidity area, you know. Yeah, so I'll take this. I'm not super big fan of it, honestly. I don't know if I take this in the live markets, but for the sake of our backtesting, I will put this in the trade journal. Okay, so I've set it up with a 15.5 pip stop loss based on the ATR. Let's see how it goes. Not looking good. I reckon we're going to break this low instead. Yeah, okay. So that's as expected. Maybe it would work out with the 2R, No, looks like it would have taken you out regardless of where you entered. Oh, don't need to delete that. So I'll keep it on there as a 1% loss. Okay, so here's a pretty decent sweep. We've got this large trend down. We've got these kind of equal highs here. And we've swept in quite deeply and retraced quite aggressively as well. So you could take this as a V kind of sweep, like I've described a few times now. There is a danger when you take a sweep on these entry candles, which are very large. Ideally, you have the deep sweep and maybe you don't retrace the whole move all at once like we have in this case. You just retrace like half of it. Yeah, again though, I'm testing, I'm learning, so I am going to put this in my backtesting journal. I think I'm tagged out already. Yeah, so that's a 1% loss. By the way, I haven't mentioned yet, this video is sponsored by 5%ers. I've been trading with them for several years. I've had multiple payouts. I've been on their YouTube channel to be interviewed. They're an excellent prop firm, probably the best in the industry, one of the oldest in the industry as well. So if you're looking for a prop firm, I highly recommend them, and I'll put a link down below. This one would have been good. So I know I've clicked forward, but this is just data gathering. I'm not practicing my skill set. I am just getting data to filter out. So we've got this push up, we've got this push up. So we do have relatively equal lows. We are also kind of above this larger range. So that's pretty cool. Yeah. I don't know if I wouldn't normally put too much weight on this larger low, but yeah, this is definitely a trade that I like the look of. This has a 17.7 ATR, so I'll put 177 there, and hopefully 3R. Yeah, it's before we reach the highs, so that's good. After I go through and I get all these trades, I'll probably have like 200 or 300 trades for all of the years that I'm going to be backtesting. What I'm then going to do is I'm going to filter, I'm going to test out having profit targets. So rather than having a fixed 1 to 2 or a 1 to 3, I would test just targeting this high or maybe even the previous high. Although this high, you'd definitely be affecting the win rate because it's not going to go that far every time. And the way that I'm doing that, because you're probably thinking that sounds really tedious, and it is, but if you track the max favorable excursion, it makes it a lot easier. So that's another 1% loss, that's no problem. So far we're in mid-February, we've got -1, -2, -3, and then over here we've got +6. So we're +3% for a month and a half. I would like to have about 2% profit per month. So right now, 3% profit is exactly 2% per month, considering that we're in mid-February. So let's see if we can get any more setups. This is looking good. Yeah, that's beautiful. Okay, this is a perfect sweep. The only thing I have against it is that we're kind of going against the trend. I'm not sure of the significance of counter trend sweeps yet. This is like this, right? So I don't know if these are kind of trades you want to be taking. One good thing about these though is that the fact that we range, if you make sure that we range and we're not just descending and you take a sweep here, the range shows that we're slowing down. You know what I mean? So this is, if I was to draw like an acceleration curve, we're slowing down until price starts moving flat. So this is a good way to know whether a sweep is also going to be a reversal. And not only that, but this is also a bit of a V shape. Issue is the entry candle is very large, so we don't have a lot of protection. Ideally, your stop loss is where it is right now, like kind of below these lows. But yeah, we're not doing that. We're just doing a ATR stop loss, which means we're not very safe. Let's see, 1 to 3. Yeah, so this is not ideal stop loss and take profit locations. We're not really targeting anything here with the stop loss. There's nothing to the left, and our stop loss is in a random place as well. So this is the issue with having like a fixed stop loss and fixed take profit. I do think this will do well though. Yeah, okay, so there's a 1 to 3 again. Yeah, that's a great trade. All right, this is nice. If we break this high, we've kind of got a directional sweep. Yeah, okay, that's super clean. Also breaking into this thin auction area. Maybe I can put on the session volume profiles just for temporarily, so you can see literally the fair value gap. To be fair, in this fair value gap, there is no time spent at all in this area. This is an area which price moved through very quickly. And honestly, once you get used to the session volume profiles, you don't even need them on, because it's just based off of time spent on TradingView, based off of ticks rather than actual, like, you know, contracts traded or lots traded. So it's not real volume. But yeah, this is an area where price moved through very quickly. So we know that if we touch into this area, like this candle did, that we are prone to having some kind of reaction. So in this case, we've had exactly that. I love these trades because, well, I just told you how much I love flags, right? Can you see how this is just a larger flag? So you know, it's literally just a flag, these directional sweeps. I hope you guys have found this helpful, by the way. I know I'm just throwing so many concepts at you. I've shown you the session volume profiles. I've shown you the ATR. I've spoken about all these different sweep filters we're going to be backtesting for. So I hope you find it at least a little bit helpful, you know. Yeah, you saw that was a perfect trade. That was a 3R within 6 hours. So just straight to our take profit with no retraces whatsoever. And you'll notice that the location we actually got the retrace was around this low here. I would not be surprised if we target this low and retrace. If we do, I'll take a sweep. So yeah, let's see. This is peak sweep price action right now. This is the best when you have a range and you're taking shorts at the highs and buys at the lows and they're just winning. That's the best feeling ever. Oh, look at that. That's a great reaction. That moves straight in our direction. Did we hit a 1 to 2 there? Not quite. So we haven't moved our stop losses to break even. And you know what? That's just reminded me. Did we hit a 1 to 2 on any of these other trades? Like maybe this one? No, we didn't. Okay. Because otherwise that would actually be a break even trade. So yeah, the losses all go straight against us, which is good because there's no profit left on the table. It shows that we've got good risk management. Awesome. Okay, so there's another 1 to 3, and there's that peak sweep price action I was talking about, where you're just taking trades, taking wins up, taking wins down, taking wins all around. So that's what we want. Okay, coming to the end of March, and that is it. Done. That looks good. Okay, so what I'm going to do now is I'm going to go through. I'm not going to put them all in my journal today. I need to get out of this room. It's 29.4 degrees, so I'm going to journal those tomorrow. I'm just going to add those all up for you guys, and we'll see how we did backtesting January, February, March of 2023. Okay, guys, I've just gone through and I've added them all up. We had 1 break even, 5 3% wins, 4 1% losses. So that is 10 trades in total. And that is an 11% expectancy, which is exactly what I was anticipating, to be honest. With my other trading entries, I obviously have a much higher risk reward. Like the average win is like 3%, 5%. And I've noticed that if you divide the total return by the number of trades on my other entries, the reversal, the average reversal makes about 5%. The average flag makes like 3%, and the average continuation makes about 5% as well. But what I've noticed with sweeps is the average sweep trade will make you 1% profit. So this is kind of what I'm aiming for. And this is perfect in terms of the high frequency entry, because we've taken 10 trades in 3 months, which, you know, if I introduce EU as well, that's really going to help smooth the equity curve. And obviously in quiet times when I'm not trading the trending entries, it's because the markets are ranging. So in the quiet times, I'm now going to have this entry to trade, which is fantastic. So hopefully won't have as many quiet periods. But yeah, I'm basically aiming for a 1-to-1 kind of profit factor. I think it's profit factor when it comes to sweeps. So I want to make about at least 1% per sweep trade that I'm taking. So yeah, I hope you guys have found this video useful. I'm gonna get out of here. My computer is just making the room hotter and hotter. I really appreciate you guys watching to the end. I hope you found it useful. Please let me know which of these concepts you hadn't heard of and what you found interesting. Yeah, comment this emoji to show me that you made it to the end, and I'll see you next week. Thank you guys.